It's about that time of day again here, boys and girls. Welcome back. Newsletter time. JJ here. January 13th, 2015. It is a Tuesday evening here at our corporate headquarters in Los Angeles, California. A wonderful, is it spring yet? I don't know if we call this spring yet, but it feels a little bit springy here in Los Angeles. Anyways, beautiful day here in LA. Tuesday evening, January 13th. Well, we finally got the correction on crude we're talking about, right? Finally got the correction on crude. Made a killing buying it today. Today was a pretty easy day buying crude. We got gold all the way up at the highs now, getting ready for, right, like we talked about last night, gold pushed. It finished its move as we expected. Now ready to sell this sucker all the way back down. And then, you know, we almost went 3 for 3 last night. We got the big collapse on the Russell, but it kind of overshot, right? That Russell went a little bit further than what I had thought we would see. Boy, that Russell is a wild animal. And I got a lot of reasons why I don't think this Russell is going to calm down anytime soon. All right, I can't wait to show you. We have a megaphone pattern on the Russell setting up for tomorrow. Oh, baby, it's going to be a busy, busy Wednesday. Now, before we jump into those charts, had a pretty good day today, right? Had a really good day, actually. Hope you guys did too. Before we jump into those charts tonight and get you guys ready for tomorrow, I do want to remind you guys, make sure you're watching our video right now on our trading blog at sidewaysmarkets.com. Why, you ask? Well, there's 3 reasons why. I'm glad you asked. I want to tell you. There are 3 reasons why. First of all, you can download all of my charts right below the video today, right? So if you're watching this video on our YouTube page, there should be a link right below the video in the description. That'll take you over here to our blog. On the blog, you can download my charts for today. All the charts I'm going to go over this evening, you can download those on your computer. That way you've got them ready for tomorrow. I also have a free pass for you to come out and join me in my live trade room any day this week or next week, right, or the week after that, whenever's convenient for you. I got a free pass for you. If you're not a member of School of Trade and you're wondering, hey, what does it feel like to be in the trade room? What type of patterns are we using, right? All that fun stuff. How do we use these levels, right? I'm going to show you guys live in real time in our free pass. And then third thing here, last but not least, right above my ugly mug, you'll see a spot there for your name and your email address. Give me your name and your email address, and you can register for our nightly newsletter mailing list. All right, guys? Now, if you grab your free pass or if you register for the newsletter mailing list, I'm going to send you a verification email. So make sure you check that verification email. And if you've never received email from us before, make sure you check your spam and your junk folders. Not that we apply, but in case you don't see it in your inbox. All right, guys? Ready to rock and roll? Tuesday evening, what happened today and what are we expecting for tomorrow? We got some strategies here for you. Wow. All I got to say is wow on this Russell. What a wild, wild ride this has been. If you rewind the tape, right, we had this sell-off last week, right? We nailed the short on the Russell right at the beginning of the year, right? January 5th, 6th, and 7th. We see an overshoot. We said, all right, expect a correction. We got the big correction. I said, well, anybody can put together a one-day rally. Let's sell these highs. And sure enough, here we are right back off those highs. So everything going according to plan. I honestly didn't expect to see it go this high, right? But if you look at the chart, right, and we talked about this today in our trade room. If you look at the chart here, you'll notice there was literally no sell clue until you got just about above that high. And then we started to see those sellers come in, and boy, did it dump fast. So again, if you've listened to our advice here at School of Trade, if you've listened to the newsletter over the past 2 weeks, it's been pretty easy pickings here on the Russell. Now, here's where we got a little bit of funny business going on. Where are we right now? We're right smack in the middle of this wedge or triangle or consolidating range, whatever you want to call it, right? So you draw the trend line off the high, draw the trend line off the low, and we are literally smack right in the middle. Now, you know what Mama says. Mama says, do not fiddle in that middle, JJ, right? Don't fiddle with the middle. Don't trade in the middle. We can trade in the middle, but we know that it's going to be sloppy. We know that there are going to be buyers buying these lows There will be sellers selling these highs, and because the markets, just like life, do not operate in a vacuum, there must be someone in the middle to be trading this right now. So that's why the middle is oftentimes going to be very sloppy, right? You'll get buyers coming in at the lows, you'll get sellers coming in at the highs, but who's trading in the middle? Uneducated, uninformed, not very well capitalized traders, right? People that we really don't want to be modeling after. So my plan right now for the Russell, okay, is to be a seller at the high, a buyer at the low. That's where the big money is going to be made here, right? But as you can see, though, we are a ways away from that right now, okay? So a couple things I want you to take away from this chart. First of all, we're right in the middle, okay? Be careful. This is going to be a little bit sloppy. Okay, maybe trade a little bit smaller size. Pay close attention to your risk profiles, right? Because it's going to be a little bit whippy in that middle. Second thing, we've got targets here to sell at the high, targets to buy at the low, and you can see it may take some time to get back there. So what is a day trader supposed to do? Just not trade? Well, let's take a look. Let's drill it down a little bit further here. Now, this is why I said you might want to get the kids out of the room for this one. Put the helmet on, strap them all down, because this could get a little bit wacky here. This is a megaphone pattern. This is really rare, right? I think I probably only talked about a megaphone, probably 2, maybe 3 times in the last 6 to 8 months. I mean, I can't remember the last time I talked about this. I believe it was on the Russell late last year. Right? I believe, yeah, it was. It was back in October, November. We had that megaphone last year. I mean, that's it. So this is a relatively rare, but boy, is this a very powerful pattern. The way you trade a megaphone is you wait to sell the highs and you buy the lows, right? It's pretty much the exact same scenario that we saw on the prior chart. The only thing here is we got another little level here at 91.6, 95.3, 99.5, and then if we happen to sneak through it, right, that little trend line overhead. So I'll tell you guys, this is why I don't see any reason for this Russell to calm down, right? Besides the simple fact that we've been running rampant the past week here on this Russell, up and down, right? I mean, it's been all over the place. Great for day traders, and it's probably going to continue. But remember, the easy money is going to come selling the highs, buying the lows right now. Right in the middle, just be careful. If you're going to trade the middle of this range right now, I personally would recommend you go a little bit smaller size, right? That way your risk profile is a little bit safer, okay? Because you're probably going to have some difficulty with slippage, a little bit less liquidity in that middle, okay? Now, here's a very interesting chart. Here's the Russell price action chart. We have a very wide long-term bearish channel, and we're going to be looking for basically long-term selling opportunities up at the highs, right? We definitely want to sell the high. Oh, sorry about that. We want to sell the high of that bear channel, right? So we're definitely going to be keeping an eye on that high, 1195, 1200, which just happens to be right at the top of that megaphone pattern we talked about earlier. But look short term though. In the short term here, right, we got a little channel, we got 1, 2. So I would expect price here to continue higher until we get up to this 1183 even, right? Give or take a few ticks there. But I would say 1183, that area, you'll notice you get a nice little swing high level there. If I had to guess right now, I would say right in this area right here, this is where we should get up into. And then from there, where do we go from there, right? Do we blow higher and then look for a short off those highs? Or do we go up and in and then collapse right back down in, right? It's tough to say exactly what's going to happen, but the odds are definitely in our favor to see price get up into this area between 87, 83 and then come right back down. That is more likely than seeing it go up, right? Consolidate, keep going, and then go higher. Either way you slice it, though, I'm going to be looking for, again, short-term buys, taking me up into this range here, and then selling if we collapse there. And with this Russell, the way it's been so far, you're probably going to see it. It's either going to go here, consolidate, and then reverse, or it's just going to go literally a little pit stop and then bam, straight up, and then we'll get the reversal off the highs. So short term, I don't see any reason why we can't get to that 83 area, And then from there, which way do we go? Do we go up and then down, right? Or do we just take right back off the downside and retest those lows again, all right? Short-term buying opportunities, long-term selling opportunities, and again, careful here on this Russell. It's going to be a slippery little sucker. I'll tell you that much. It's going to be a little slippery here in the middle, okay? Now, I had to pull out the big guns on this one, 64 anchor chart here on crude. Whoa, right? This is like a decade chart for a day trader, right? I mean, there is a ton of information on this chart. The only reason why I use this slower time frame chart, guys, is to get a bird's eye view of what's happening, okay? You're never going to trade this chart. Well, you can, but not as a day trader. One of the most common mistakes that I made when I was a new trader, and this is why I'm a good teacher, because I think I've made every mistake in the book. One of the most common mistakes that I made, or consistent mistakes that I made, one of the most common mistakes I see new traders making is they jump up to these big high time frames and then they try to trade off of those. Guys, if you're going to trade off a 64 anchor, you need to have either a huge account or you can only trade very small size because your stop loss is going to have to be a lot larger, right? This 64 JJ bar, 64 ticks of range in each candlestick. That means the bare minimum, you get a 75 tick stop. Nothing wrong with that, but you now need to make sure that 75 tick stop fits inside your personal risk profile, which of course we'll teach you guys how to do here at School of Trade. So this again, just use this to see the big picture, okay? Don't overthink this chart, okay? Just find a higher time frame. I like to use multiples, right? 16, 32, 64. It doesn't matter. This is just a way they like to look at the chart. So bird's eye view, here we are. We asked for it. We nailed it yesterday. I mean, the volume never, Charles Dow said it the best. Charles Dow, right? Our great-grandfather of technical analysis, he said it best. And yesterday, we used that volume to confirm the move. So we knew we were destined to push higher on gold, short term, obviously, and now here we are all the way back up at the highs, and we're now looking for the sell off these highs. We've already seen it start. So we're all the way up at the highs on the range on gold. We're looking to sell these highs. I've got an easy target, 1205.9. I'm going after 1200 even. If we do happen to push higher, and crude oil right now, this just demolished price of energy right now, the oil price is really causing a lot of people to be just kind of scared, right? Don't ask me why. People, they'll figure out something to be scared of. And if the average consumer can't do it, the news media will find a way to scare you. So, they're always going to be fear-mongering something out there. So I'm sure there's a potential here that these buyers may concoct something, right, that causes them to keep being scared, right? Not sure what to be scared about, but we do have a buyer's target and a sell zone overhead as well. So I'm going to say right now, I'm definitely looking for shorts right now on gold. We've been talking about this all week. And then, of course, if we do happen to push higher, which I don't think is going to happen, but, I get a headache when I think too much. I don't get paid to think. I get paid to trade. So, I could see it going higher. If we go higher before we go lower, sure, we'll sell it there too. No big deal at all. Right now, though, we are at the highs. It's going to take a really small miracle to convince me to start buying right now. And if we do push higher, it'll probably be one of those, 3 a.m. European opening bell, just boom, right, straight up, and then come back down. So it'll probably be a violent jump higher if it does go higher. So keep an eye on the sell side here if you're trading on this funny yellow metal they call gold futures. Gold 16 anchor chart now. Now let's slice this down by a third. Go to that 64 down to the 16. And here we go. Here we go. Now we're talking. Now we're talking here. We go up at the highs of the range. Now we're getting lower lows, lower highs, right? As you can see here, you got a nice strong bear channel coming down off the highs. Just be aware, though, you do have this trend line hanging out down here. That will be support, right? I've marked up all the swing levels here as support. Okay, all these levels in green are going to be great targets for you. I've marked up the most important targets on the way back down. Those will be the most important targets, all right? And then you can use those smaller green levels, right, as medium-term targets on the way down if you need them, Okay, so gold trading lower off the highs, looking to sell at resistance levels overhead. So as the price goes lower, looking to get short here, looking to get short here. And again, we talked about the bigger picture there up to that 12.55 if we do need to get there. Okay, now don't forget, right? We're just getting out of the woods here for these buyers, right? We're at that tipping point now. So don't be surprised if we make a run for these highs before we get this thing to drop. Okay? I wouldn't be surprised at all. Wouldn't be surprised at all. Definitely staying to the short side right now. And the best options for selling short, you're looking at them. Big red areas overhead, the top of this channel overhead. Those are great spots, right, to be looking for a short. If we happen to go lower without going higher, right, if we happen to go lower here, look for the buyers to fail. Okay, this is one of those scenarios where when we're kind of tiptoeing our way through these buyers here, right, because, you know, we're not blatantly, obviously bearish yet. We're kind of, if we didn't know that we were at the highs on this range, right, see, this is what gives it away. We know where we are. The fact that we know where we are in the big picture gives us the confidence we need to get, you know, to know that we're looking to stay to the short side. Okay, but if we don't get this to go lower, you know, if we don't get to go higher before we go lower, if we just collapse here and go lower, you're going to see buyers come in here. So look for those buyers to try, and then once those buyers fail, you got them. You got them. Remember, the easiest money you're ever going to make is when the opposite side of the market is getting their heads taken off, right? That's where traders, they cut their trades, they bail out of their positions, right? Think about it. As human beings and as traders, we take our time getting in, but we don't waste any time worrying about getting out, right? Get me out of here. So when they bail on those trades long, that's going to be a great spot to be a seller here on the gold. As always, come in tomorrow morning in my trade room, and I'll give you guys the exact specifics here on the gold. How about the price action? Now we're talking. Now we're talking. This is a very, very bearish chart here. First of all, look at this. We got this long-term channel, right? We were buying inside of that earlier this week, and then they break it, and then they just give up on it? Now, if you're a member of mine, you know exactly what should happen when we break that channel, right? They just gave up on it. Literally, the buyers, it looks like, just walked away. So the bulls failed to keep prices moving higher. Then we see the sellers jump in and say, gotcha, suckers. We got that lower low, lower high, and then looky here, right? Channel break. So we now know, again, if you're a student here with me at School of Trade, you know exactly why I'm calling a target for sellers down to this 1222, 1219 area. Tough to tell exactly how far we go. If you want to err on the side of caution, err on the side of caution for a target at 1222. Now, how am I supposed to get short right now? Well, think about it. There are ultimately three ways I can get short. I can look for a retracement pattern going lower. I could look for a failed buy pattern going higher. What's the third one? Traps, right? I could look for those buyers to try to get high, right? To push this higher. Trap at 35s, trap at 40, right? Yeah, baby. Easy pickings there. Stay to the short side right now, guys, on the gold. Targets at 22.4. And again, I can look for bull traps at the red levels above. I can look for failed pullback patterns if we try to go higher, or I can look for successful retracement patterns as we go lower. All right, guys? Looking good here. Our patience paying off here on gold right now. And then how about that crude? Boy, like the Russell, this crude's a slippery little thing, isn't it? I know. Last night, my exact words were, I just cannot stomach telling you to sell those lows, and sure enough, right, it keeps going lower. I know, guys, I didn't make the rules. I'm just here to dance to them. Believe me, it's a challenge. Professional traders do not like selling at the lows, right? And if you made your money on the way down like we did last year, now we continue to scalp on the way down. It's difficult to sell these lows. So if, like me, if you're a bit of a sissy, right, when it comes to selling these lows, I understand why. It's because you know what usually doesn't work. So remember, we've been talking about this for a few weeks now. You got to really be careful right now. Right when you start to have the confidence to sell these lows, you know what's going to happen. That's when that's going to stop working. That's the way life goes. It's the way the markets work. So I am sticking to my guns right now. I got to act like a professional, right? At least I act like one. No, I'm kidding with you, right? But we know it's bearish. I can't keep selling these lows, right? Last night, we were right about there, right? We were right there last night, and I said, all right, well, wait for a correction and then sell it. Well, sure enough, by the time I got into the office this morning at about 7 a.m. Eastern time, we had already slipped down to that 45 target, and then we began the correction. So we had a field day today buying this crude on the way up, right? About time to get a nice correction. But look what we have here now. Now we have a little bit more room to go. Okay, a little bit more room to go here. I got 46.72, 46.93. I've got this trend line overhead. We've got 47.65, 48.48. Right, you get a ton of areas overhead where we will be looking for reversal patterns and then continuation patterns. We're almost there. Now, we may collapse right now. We may go higher into tomorrow morning before we collapse. Tomorrow's a Wednesday. Wink, wink, nod, nod. Couldn't you see tomorrow inventories pushing price into 47 and then the big collapse? Yeah, it's like we're in a Hollywood movie, right? I mean, I could easily see inventories taking us higher tomorrow, and then just like inventory day, the opposite direction is the way you want to trade it. So I could easily kind of speculate, maybe fantasize is the word, right, of price going a little bit higher so we can sell this sucker right back down, because that's where the professionals really looking for it right now. We're looking to get this up here a little bit higher so we can really just smack this sucker right back down, okay? So professionals are waiting patiently right now while the rest of the world is clamoring to sell these lows. We do have room to push higher, so use those areas above as our areas to sell. And then just for giggles, if you draw this out, I'm a big fan of measured moves here. If you draw this out to a measured move right now, that puts us right at 41. We kind of have, that $40 a barrel pegged because, of course, our best friend, right, our best friend, the Saudi oil minister, right, the prince, yeah, he pretty much came out and told us that 2 weeks ago. So, we're not there yet. We don't know how we're going to get there, but it almost feels inevitable that we see $40 here probably before the end of the month. Who knows? Again, I don't want to go and make any predictions, but just for kicks though, 41 is definitely in the cards here if these bears come back here with a vengeance. And then how about some more short term here? Let's go a little bit faster time from now on crude. Look at this chart. Now this is a pretty interesting chart here. We talked about, okay, buyers are in control here short term, right? So we can definitely see here. Now look at the big clues in this chart here. This is a pretty interesting chart. First of all, crude is bullish in the short term, but the party might be over. I think the keg's getting flat, right? Everybody's picked through all the party mix, right? I think this party might be coming to an end. You can see here, higher high in price, lower high in volume. Higher high in price, lower lows or lower highs in volume. That means these buyers are dead men walking. Now look at this closely though. Look what we get. Look at the volume spike. There is a volume spike there, and look where it happens. Right? At the BMT. Shocker, right? Absolutely. So clearly there were sellers there getting back in, and they just got smoked as price kind of flirted up, right? Maybe it was sellers taking profit. Doesn't really matter what the cause was, but the bottom line is all I'm really paying attention to is those two highs, and mark it up at the volume highs at the bottom. You can see we do not confirm this price going higher. Remember, I used the same technique on gold last night, and it worked flawlessly. Let's see how it does tomorrow. Now, this does not mean that we just collapse, but what it does mean, though, is we're not as confident right, as we would be as if we had buyers confirming with volume right now. Okay? So because we have some clues from volume, and because we think we may have one more push up, right, it's not going to go that easily back down. Maybe it does, right? But historically, these markets are built to take our money, right? What comes easy to human beings is very difficult for a trader, right? What is easy for a human is the absolute wrong thing to do when you're a trader. That's what makes this business so special, right? Is it takes the smartest minds in the world, right, and it literally brings them to their knees and to the bankruptcy court, because you've got to be careful. You can't just go in this aggressively, right? You've got to be expecting you're going to get some curveballs. And that's exactly what we're expecting right now. So how do we trade this? And I'm thinking, okay, the easy way is just sell it. Well, I'm a day trader. So for me, I'm risking 10 ticks to make 30 or 40 ticks. I do not have the luxury of saying just sell it. I have to be more precise than that. So let's think about where would the two scenarios be the best way to trade this overhead, right? So here's the best way to trade this. First, we're going to sell resistance areas overhead, right? So that's the first scenario. Scenario one is that we go back up, we retest these levels, and we sell them, right? Reversal pattern short, and then wave short, continuation short on the way down. I hope it's that easy. My gut tells me, though, the easy way to make the money tomorrow is going to be to look for the buyers to try and fail. So we're going to be watching closely here because, again, tomorrow's an inventory day. Tomorrow's a Wednesday. So you know there's going to be a little bit of funkiness in this market tomorrow because of that self-fulfilling prophecy and because we had this rally today, right? This rally, which we saw coming a mile away, you know, it's going to get people starting to pick bottoms. It's also going to get some of those rookies to go, oh, JJ said sell, right? So it's going to start getting people involved. Okay, the professionals be watching. So I personally think, though, we've got a little bit higher to go. Maybe I'm wrong, maybe I'm not, but volume doesn't confirm we go higher here. So, you know, maybe we get some exhaustion here, and then once we start seeing those buyers try and fail, look out below, right? Again, tough to say exactly what happens right now, but we are definitely still on the sell side. So selling opportunities here at the resistance levels overhead. Also, come out and see me tomorrow, and we'll watch for those times when those buyers try and fail, and that'll be a great opportunity for us to get short. Okay, remember, the easiest money you're ever going to make is going to come when the opposite side traders are getting stopped out and forced out of their positions. Now, last but not least here, crude oil price action. We see price at the highs of this bull channel, which basically tells us short-term selling, but we're not out of the woods yet. So this bull channel here, you can see obvious bull channel. This bullish channel, A, B, C, D, puts us a little bit higher. So again, we have a technical clue that's telling us we're probably in store for at least a little bit higher move here before we collapse back to those lows, if we do collapse tomorrow. So my gut tells me here, well, let's leave the gut out of it, right? Here's what the chart tells me right now. We're due for a pullback, right? We go up to the highs of that channel, we're due for a pullback. The big question is, and this is where professionals are going to be watching closely, because you know what's going to happen. The buyers are going to try to come in right around this 55.74, right? Sorry, 45.74. This whole area right here is going to be a very attractive area for a buyer, right? I'm sure there are lots of people out there that are saying, "See, I told you, we can't keep going lower. We're going back to 100 now, right?" So you're going to see some buyers jumping in, letting their emotions trade for them. I will be looking for a buy. And then that's where the failed buyers come in right there. This is a very important area right here. Okay? And I wouldn't be surprised here, though, again, if we pull back and we go higher. I wouldn't be surprised at all. So right now, short-term sells. Short-term sells down to those lows. Short-term buys from there. But be watching for those buyers to try and then fail, right? Look for those big candlestick wicks, right? Small bodies, reversal candles. You can learn all about that stuff in my trial. You can learn all about that stuff in my intermediate course, and you can learn the strategies in our advanced course. All right, guys? So the buyers must hold the lows, or we are headed back to 44.28. So look for those buyers to try and fail at these support levels if you want to get short. If they don't, we're going to keep going higher here, and you got that $47 a barrel staring you right in the face right now. And again, tomorrow's inventory day, so your guess is as good as mine, right? It would be a little bit too easy to kind of fantasize or anticipate that inventory report, sending it higher, and then the professionals selling the highs here like we always do after inventories. All right, guys? Want to thank you so much for being here today. A little bit longer video than I wanted to, but, you know, I got to cover all the nuts and bolts here for you guys. Don't forget, please share this information with a friend. Don't hog all the good stuff to yourself. Download those charts, grab your free pass, register for the newsletter. And by the way, if you happen to stumble over here to SchoolOfTrade.com, don't forget, you can register for our free trial. Our free trial and our 7 days to success. We have a 7-video series in my trial. It's going to teach you exactly how I trade. Guys, you're going to learn more in 1 week for free $99 than you're ever going to pay thousands of dollars anywhere else on the internet. I promise you that, guys, and I'll prove it to you. Grab that free trial and make sure you contact the office if you have any questions. All right, guys? What a football game last night, huh? American football, of course. Boy, I'll tell you, when you put those college players on the field, that is some of the most exciting sports. I couldn't look away. I mean, it makes professional football look like a sleeper. Boy, that was incredible, right? Congratulations to Urban Meyer and the Ohio State Buckeyes. Boy, what a great program they have there. Hope you guys enjoy the game. Anyways, just having fun with you guys. My name is Joseph. Same time, same place tomorrow. You got it. I'll see you there. 8 p.m. Eastern Time on my newsletter, 8 a.m. Eastern Time in my trade room. I'm out of here, boys and girls. Adios. Bye for now.